Happy Halloween to all my viewers out there. It's 14 degrees here in Mississauga, Ontario for this time of the year. It's a wonderful reward for all the kids and adults who have waited 2 years to be able to go out trick and treating or just be with families and friends. Greetings, viewers. This is investment advisor Aman Sanga dressed up as Jack Sparrow for my monthly update for the month ending October 31st, 2021. As usual, I'll try to break it up into three main topics. And for this update, I will start with the index returns. We'll go about what has happened in the indexes all over the major indexes, especially here in the US. I'll get a bit more into the inflation story. I've been talking about it for the last update, for the last couple of updates. And then where we are in the time of the year, just some things to look out for as we approach November and December and to end of 2021. So let's get started. The first part is how was the month of, how did we do year to date? As you look at this deck, I mean, this is familiar, and there are no surprises or no changes from what we've seen in the previous few months. Just looking at the bond returns, and this is a story that's tied into the inflation. 2021 might be one of the few odd years where we would really we're looking at a very positive possibility of having a negative returns for the bond index, for the bond universe. The equities have done relatively well with the S&P leading the pack, and the others are following suit. And the only laggard has been the emerging markets, which is, I've shared this before, that the story from China hasn't been that good, and which is driving the EM index down along with it. And the other big winner so far has been oil, which has had a great run this year so far. And it's likely to continue going forward with the pressure on commodities. So let's take a dip, move on to the second topic, which this is another slide. I'd shared a slide about inflation in my last update, but you can look at the US data, whether it's the total inflation or the core inflation. It is well beyond the accepted range, which is acceptable to the central bankers. So it is running high. We don't know when this is going to revert back to the acceptable band, but that is the major theme playing out. I mean, it's so high that it's hard to ignore. And we did see the central bank on both sides of the border come out. The Fed came out with a big announcement that they will be looking at taking their foot off the quantitative easing, the 120 billion worth of bonds that they've been buying every month. So they're really thinking of taking the foot off the pedal on that. And then on the north of the border, Bank of Canada just came out earlier this month, and said that, we are not doing quantitative easing anymore. And if you've been following the news, there are economists out there who are expecting rate hikes starting as early as early 2022. So with that, I think the inflation, the story, it still stays. Is it transitory? Is it here? But how long is it transitory? That's going to play out, and it will be a theme that keeps us hooked with the rising interest rates. Now, the last part I want to talk about is as I come to my last topic, is about the outlook for November and December. And if you look at this, this is just the US markets, there has been a kind of correction that's just beneath the surface. And even S&P 500 or all the three major indexes have had under the hood decline for majority of the stocks that comprise that index. Now, it's been outweighed by some of the larger cap stocks that dominate the S&P, but you can definitely see that there has been a downturn in in the major indexes, in the US-based indexes. And what that has done is, if you go back to this chart, which tracks the S&P 500 for the 12 months of the year, this red line was how it was tracking before this correction, which happened under the hood. And what this has done is that it has brought it in line with how it has done previously in the previous, as compared to the previous historical averages. So earlier it seemed way high, but right now it's sitting very close to what it was if had it been any other year other than 2021. And November and December historically have been very good for stocks. There's nothing to say that this is exactly what's going to happen in 2021. But where S&P is sitting right now, it is very close to its seasonal pattern. So if things hold, I think we would be setting up for a good returns for the equity indexes to end 2021. And the other part, which is more related to the Canadian dollar, is we have seen from Bank of Canada that the outlook for rate increases is out there. Oil is trending, has done very well, which is good for the Canadian oil producers. So the other part here is that the Canadian dollar, this is an internal model from Industrial Alliance, where it's suggesting that the Canadian dollar is undervalued at this point, and given everything that's going on with the Bank of Canada being a little bit more aggressive on rate hikes, and then the Fed, the oil prices where they are, we could see a spike of the Canadian dollar gain its value from where it is currently to somewhere around, from where it is to at some point from here to between 90 cents a dollar. So that does have, both factors do have an impact on portfolio positioning. Most investors don't have their portfolios hedged, especially if they have an exposure outside Canada. But if this is something that's of concern to you, you know the number to call, 905-363-5035. With that, I'd just like to say thank you so much for watching. Have a happy and safe Halloween, trick or treating, enjoy it with your friends, and I'll be back with my November update. Bye for now.